The market thinks NVIDIA is a stock story. It is not. It thinks this is about AI hype, data center demand, and earnings beats. It is not. What NVIDIA just triggered is not a rally. It is a material event, and almost no one is pricing it correctly. While traders were watching GPUs and forward guidance, while analysts were arguing about margins and multiples, something structural happened in the global supply chain that makes the current price of silver meaningless. Something happened that quietly reclassified silver from an industrial input into a bottleneck resource for artificial intelligence itself. This is not speculation. This is physics, infrastructure, and scale. NVIDIA did not announce it directly. They didn't need to. The signal was embedded in their build-out trajectory, their power densities, and the way hyperscalers are now designing AI data centers around NVIDIA's architecture. The media is calling it an AI boom. They are missing the real story. Because NVIDIA's chips do not run on code alone. They run on electrons. And moving those electrons at the scale NVIDIA now requires is exposing a hard limit that Wall Street has ignored for decades. That limit is silver. For years, silver was treated as background noise in technology, a thin coating, a contact, a trace material that didn't matter. That assumption is now breaking down, and NVIDIA is the reason. In this deep dive, I'm going to show you how NVIDIA AI data center expansion is quietly triggering a structural silver run. I'm going to explain why this is not about one chip generation, but about an irreversible infrastructure commitment. I'm going to do the math that the analysts refuse to do. And I'm going to show you why the current silver price is incompatible with the physical reality of AI at scale. The banks are modeling demand linearly. NVIDIA is scaling exponentially, and exponential systems do not negotiate with supply chains. To understand why this matters, you have to understand what NVIDIA has actually built. Not the marketing slides, not the earnings calls, the physical system. Modern AI data centers are no longer rows of servers. They are power-dense computational factories. NVIDIA's latest architectures concentrate unprecedented amounts of energy into confined spaces. Every rack, every interconnect, every power distribution unit is operating at limits that were unthinkable 5 years ago. This is not incremental compute. This is an electrical arms race. And in electricity, resistance is the enemy. Heat kills performance. Heat kills uptime. Heat kills margins. Every fraction of a percent loss to inefficiency matters when you are running tens of thousands of GPUs 24 hours a day. That is why NVIDIA's ecosystem is converging on one unavoidable material reality. Silver is the best electrical conductor on Earth. Not copper, not aluminum, silver. As power densities rise, as signal speeds increase, as data center architectures move toward tighter integration and higher current loads, the tolerance for loss collapses. Materials that were good enough are no longer good enough. This is where the story changes. Silver is no longer just being used for switches and contacts. It is being embedded deeper into bus bars, power rails, connectors, advanced interposers, high-frequency signal paths, and thermal electrical interfaces throughout AI infrastructure. And NVIDIA's scale forces the issue. One AI data center does not matter. 10 do not matter. But NVIDIA is catalyzing thousands. Hyperscalers are racing each other. Governments are subsidizing buildouts. Sovereign AI is now a national priority. Once these facilities are designed and built, they cannot be redesigned without massive losses. The material choices get locked in. This is not a future problem. This is a right-now commitment. And the silver that goes into these systems does not come back. It is not recycled quickly. It is embedded, dispersed, and effectively removed from the market for decades. This is the first key misunderstanding in the market. People think silver demand responds to price. In AI infrastructure, silver demand responds to physics. If the resistance is too high, the system fails. If the system fails, NVIDIA's customers lose billions. That is not an option. The material cost becomes secondary. That is why this is not a speculative trade. It is an allocation crisis forming in slow motion. In part 2, we are going to zoom in on the architecture itself. I'm going to break down exactly where silver is used inside modern AI data centers, why copper substitution fails at scale, and why NVIDIA's power roadmap mathematically forces higher silver intensity per megawatt. This is not about opinions, it is about limits. And once you see the limits, you cannot unsee them. To understand why NVIDIA just triggered a silver run, you need to forget everything you think you know about AI demand. This is not a software story. This is not a chip story. This is not even a GPU story. This is an electricity story. And electricity is governed by physics, not hype. Every generation of computing history has had a bottleneck. In the 1990s, it was memory. In the early 2000s, it was bandwidth. In the cloud era, it was storage. In the AI era, the bottleneck is power density, not power availability, power density. An NVIDIA H100 or B200 GPU does not behave like a normal server chip. It does not sip electricity. It inhales it. A single AI accelerator now pulls 700 to 1,000 watts under load. That is per chip. A standard enterprise CPU pulls 100 watts. This is an order of magnitude jump. Now stack 8 GPUs on one board. Now stack multiple boards into a server. Now pack those servers into a rack. Now line up thousands of racks into a hyperscale data center. You are no longer running a data center. You are running an industrial power plant with compute attached. This is where silver enters the story. When power density crosses a certain threshold, copper stops working. Not because copper is bad, but because copper has limits. Resistance creates heat. Heat creates failure. At AI scale currents, copper bus bars swell, oxidize, deform, and waste energy. Every fraction of resistance matters when you're pushing megawatts through inches of metal. Silver is the most electrically conductive element on the periodic table, not in theory, in practice. It carries more current with less resistance than copper. It sheds heat faster. It tolerates higher current density. This is why silver has always been used in extreme electrical environments. Missile guidance systems, satellite relays, high-frequency switching, and now AI power distribution. NVIDIA's new reference architectures are not designed for yesterday's power loads. They are designed for what comes next. 8 GPU baseboards, liquid-cooled racks, direct-to-chip power delivery, massive low-loss interconnects. This is not consumer electronics. This is industrial infrastructure. Every AI rack now contains silver-coated bus bars, silver-plated contacts, silver-bearing solder, silver thermal interfaces, and high-purity silver switches. These are not optional. These are not aesthetic choices. They're survival requirements. If the resistance is too high, the rack overheats. If the heat spikes, the GPUs throttle. If the GPUs throttle, the data center misses performance targets. If the performance targets are missed, the hyperscaler loses billions. This is why NVIDIA AS data center customers do not ask how much silver is in the rack. They ask, does it work at full load? The answer requires silver. And here is the critical mistake Wall Street is making. Analysts still model AI demand as if it were software scaling. They assume marginal costs go down with scale. That is true for code. It is not true for physics. When you scale AI, marginal electrical losses compound. Every inefficiency multiplies. This is why the material bill of an AI data center is exploding. One hyperscale AI facility now consumes as much power as a medium-sized city. That power must travel through metal, not cloud metaphors, metal. And NVIDIA is not slowing down. They are accelerating. Every new architecture increases compute density. Every new node increases current load. Every new rack pushes power systems closer to their physical limits. At a certain point, copper alone cannot carry the load safely. This is where silver stops being a minor additive and becomes structural. This is the same mistake the market made with solar panels a decade ago. Analysts assumed silver usage would shrink. Instead, efficiency gains increased total consumption. AI is following the same curve, but faster. What NVIDIA has done is lock in a trajectory. The AI roadmap now assumes power densities that implicitly require silver at scale. You cannot remove it without redesigning the entire system, and those systems are already being built. This is not a future problem. This is a procurement problem happening now. Now we need to get specific, because this is where the silver story stops being abstract and becomes unavoidable. It is not enough to say AI uses more power. We have to trace exactly where that power flows and where silver is physically embedded in NVIDIA's data center stack. Start at the rack level. A modern AI rack built around NVIDIA accelerators can pull anywhere from 100 to 200 kilowatts continuously. That is not peak load, that is sustained draw. This power does not enter the rack through thin wires like a home computer. It enters through thick, rigid bus bars designed to carry enormous current with minimal loss. These bus bars are increasingly silver-plated or silver-alloyed. Why? Because at these current levels, even a small reduction in resistance translates into massive reductions in heat. Less heat means higher uptime. Higher uptime means higher revenue. For hyperscalers, a 1% efficiency gain is worth tens of millions per year. Now move inside the rack. Each server contains multiple power distribution units. These units step voltage down, regulate current, and protect the system from spikes. Inside these PDUs are silver contacts, silver switches, and silver-bearing relays. Copper contacts arc under high load. Silver contacts self-heal. They resist oxidation. They maintain conductivity under extreme cycling. Then you reach the boards themselves. NVIDIA's accelerator boards require ultra-low-loss pathways between power delivery components and the GPU die. These pathways use silver-bearing solders and silver-plated traces. At high frequencies and high currents, signal integrity matters. Silver reduces impedance, it reduces jitter. It stabilizes performance under load. Now zoom out again. AI data centers are not just racks. They are entire electrical ecosystems. High voltage switchgear, backup systems, load balancers, emergency cutoffs. Every single one of these components uses silver, not because it is expensive, but because failure is more expensive. Here's the key point Wall Street is missing. Silver usage in AI infrastructure is not concentrated in one dramatic component. It is distributed everywhere. It is death by 1,000 cuts, except for supply. Because each cut is small, analysts assume it does not matter. But when you multiply those cuts by tens of thousands of racks, across hundreds of facilities, across dozens of hyperscalers, the numbers explode. This is why substitution does not work. Could you replace silver with copper, in theory? Yes. Could you do it at NVIDIA scale power density without overheating, arcing, or throttling? No. The physics does not allow it. Copper reaches its thermal limits faster. Aluminum is worse. Exotic composites fail under cycling stress. Silver is not being chosen for luxury. It is being chosen because it is the last metal standing. And here is where NVIDIA quietly changes the game. Their reference designs set the standard. When NVIDIA publishes a power architecture, suppliers build around it, OEMs follow it, data center operators replicate it. Once that design includes silver at specific points, the entire ecosystem locks in that demand. This is not speculative demand. This is mandatory demand. And unlike consumer electronics, AI infrastructure is not optimized for thrift. It is optimized for performance and reliability. If silver adds 1% to the bill of materials but prevents catastrophic failure, it is non-negotiable. This is why silver demand from AI does not behave like normal industrial demand. It is inelastic. It does not respond to price the way jewelry does. If silver doubles, the rack still needs to function. The silver still gets bought. This is the same dynamic that turned palladium into a monster market in the early 2000s. Catalytic converters did not care about price. Emissions laws forced demand. AI is forcing demand through performance laws written in physics. And NVIDIA just accelerated the entire timeline. Now we do the part almost nobody wants to do, because once you do this math, you cannot unsee it. This is where the NVIDIA story stops being a narrative and becomes a supply crisis. We are going to convert AI hype into ounces. Start with power. A single next-generation NVIDIA AI rack averages roughly 150 kilowatts of continuous draw. Some exceed 200, but we'll stay conservative. 150 kilowatts, running 24/7. Now scale that. A modern hyperscale AI data center deploys anywhere from 500 to 2,000 of these racks. Again, we'll stay conservative. 1,000 racks. That is 150 megawatts of continuous power consumption in a single facility. Now ask the uncomfortable question. How much silver does it take to safely move, regulate, and stabilize 150 megawatts of power? Industry estimates vary, but when you aggregate silver usage across bus bars, switchgear, PDUs, breakers, relays, contacts board level components, thermal interfaces, and redundancy systems, you land in a range of 20 to 30 kilograms of silver per megawatt of data center capacity. Let's use the low end. 20 kilograms per megawatt, 150 megawatts, times 20 kilograms equals 3,000 kilograms of silver for one data center. That is 96,000 troy ounces. One facility. Now multiply. Microsoft, Google, Amazon, Meta, Oracle, OpenAI, xAI, sovereign AI programs in China, the Middle East, Europe. We are not talking about 5 data centers. We are talking about hundreds. If just 100 new AI data centers come online globally over the next 3 years, that is 9.6 million ounces of silver. And that is still conservative, because the build-out is accelerating. NVIDIA's own guidance implies a doubling of AI compute capacity year over year. That means more racks, denser racks, higher currents, thicker conductors, more silver per unit of power. Now layer timing on top. The silver is not consumed gradually over decades. It is front-loaded. Data centers are built in 18 to 36 months. Procurement contracts are signed up front. The silver demand hits immediately, not slowly. This is where analysts make their fatal mistake. They model silver demand linearly. They assume gradual adoption. But AI infrastructure scales in step functions. When a hyperscaler commits to a campus, they lock in years of silver demand in one stroke. And here's the real problem. Silver mining does not respond to step functions. Global mine supply sits around 800 million ounces per year, and it is flat. Recycling adds some, but mostly in low-grade forms unsuitable for high-reliability electrical use without reprocessing delays. So when AI suddenly demands an extra 10, 20, or 30 million ounces per year, it doesn't pull from surplus. It pulls from inventory, from vaults, from ETFs, from bars that were assumed to be idle. This is why prices don't creep up in these scenarios. They gap. Because when inventory is the shock absorber and the shock exceeds the buffer, price has to do the work. NVIDIA didn't announce a silver shortage. They didn't have to. They announced power density. The shortage is implied. And the market hasn't done this math yet. At this point, the natural objection shows up. It always does. If silver demand is rising this fast, Why hasn't the market already adjusted? Why aren't miners flooding the market? Why isn't substitution happening? This is where theory collides with reality. First, mining. Silver is not mined like copper or iron. Roughly 70% of global silver production comes as a byproduct of other metals: lead, zinc, copper. That means silver supply does not respond to silver price. It responds to demand for entirely different commodities. If silver goes from $60 to $100, a copper miner does not suddenly double output. They mine copper. Silver is incidental. The supply curve barely moves. Pure primary silver mines are rare, they are expensive, they are politically exposed, and most of the high-grade deposits were already exploited decades ago. Ore grades have collapsed. What used to be 15 ounces per ton is now 4, sometimes less. That means more rock, more energy, more water, more labor, higher costs, longer timelines. Even if a miracle deposit were discovered today, it would take 10 to 15 years to produce meaningful ounces. NVIDIA's demand is hitting now, so mining cannot solve this. Next, recycling. This is the most dangerous myth in the silver market because it sounds reasonable. People hear industrial metal and assume recycling will catch up. It won't. Silver is not concentrated like gold. It is dispersed. Microscopic traces spread across billions of devices. Extracting it requires energy-intensive chemical processes that cost more than the silver is worth at current prices. Most silver is simply lost. Phones go to landfills. Solar panels get crushed. Electronics are shredded with minimal recovery. The silver is gone. AI infrastructure makes this worse, not better. The silver embedded in data centers is locked in for decades. Those bus bars, breakers, and power systems are not recycled next year. They stay operational for 15 to 20 years. The silver is sequestered. Recycling is a lagging response to a leading crisis. Now, substitution. Copper is always mentioned. Aluminum sometimes. Exotic alloys occasionally. Here's the problem. At high current densities, resistance becomes heat. Heat kills uptime. Heat kills margins. Heat kills reliability. Hyperscalers cannot afford that. Silver's conductivity is unmatched. Its thermal properties are unmatched. Its resistance to oxidation is unmatched. In high-frequency, high-load environments, silver is not a luxury. It is insurance. NVIDIA's reference designs assume this. Once a design is validated, certified, and deployed, it is not rewritten casually. The cost of redesign exceeds the cost of material. This is the trap. AI locks in silver demand structurally. It cannot be engineered away without sacrificing performance or safety. And performance is the product. Now combine this with everything we've already covered. Flat supply, failing recycling, inelastic demand, accelerating deployment. This is not a cyclical shortage. This is not a speculative bubble. This is a structural imbalance forming in real time. And it has one inevitable outcome. Price must ration demand, not gradually, suddenly. Part 6. Script. This is the point where markets usually fail to react correctly because they're looking in the wrong place. They stare at futures curves, ETF flows, and technical indicators, while the real battle is happening in procurement meetings and government briefings. AI infrastructure is no longer a commercial upgrade. It is a strategic asset. NVIDIA chips are not being deployed to run chatbots for fun. They are being deployed to train sovereign models, defense systems, intelligence platforms, financial prediction engines, and autonomous decision-making frameworks. Every major power understands this. And when something becomes strategic, the rules change. Governments do not ask whether supply is sufficient. They ensure supply. They intervene, they prioritize, they reallocate. We have seen this before. Rare earths, uranium, energy, food. Silver is now entering that category, recognizing quietly, without headlines, without declarations, but unmistakably. Once AI data centers become critical infrastructure, the silver inside them becomes a strategic material. That means normal market allocation breaks down. Industrial demand moves to the front of the line. Investment demand gets pushed back. This is where the paper market becomes irrelevant. Futures contracts do not power data centers. ETFs do not move electrons. Physical silver does. And when physical demand is backed by governments and hyperscalers with unlimited budgets, price becomes secondary to availability. This is why sudden policy shifts matter. Export controls, strategic stockpiles, quiet purchasing through intermediaries, long-term offtake agreements signed years in advance. These actions never show up in weekly inventory reports until it's too late. And NVIDIA sits at the center of this funnel. Their roadmaps dictate deployment schedules. Their reference architectures dictate material requirements. When NVIDIA says scale, everyone else follows. This creates a cascading effect. A hyperscaler sees competitors securing capacity and moves to lock supply. A government sees private industry locking supply and moves to secure reserves. A manufacturer sees both and raises minimum order quantities. Suddenly, silver that was available last quarter is no longer on the market. Not because it was consumed, but because it was claimed. This is how shortages actually form, not through visible scarcity, but through silent reservation. And when the market finally notices, the adjustment is violent, not because silver disappeared overnight, but because it was spoken for months ago. This is why price behavior over the next phase will confuse almost everyone watching from the outside. The move won't start with a headline saying silver shortage confirmed. It will start with anomalies. Premiums disconnect from spot. Delivery times stretch quietly. Large buyers stop showing size in public markets. Instead of bidding the screen, they negotiate privately. This creates the illusion that demand is fading, when in reality it has gone dark. You've already seen this pattern before, even if you didn't recognize it at the time. It happened in uranium. Spot prices stayed flat while utilities locked in long-term contracts. When the market finally realized inventories were gone, uranium didn't trend higher. It repriced violently. The same happened with palladium and nickel and energy. Silver is now entering that same phase. The mistake retail investors make is assuming visible buying drives price. In strategic commodities, visible buying happens last. The smart money moves first and hides its tracks. This is why NVIDIA matters so much. They are not a speculative buyer. They are a signal. When NVIDIA designs for silver-intensive power architectures, they broadcast future demand without ever touching the spot market themselves. The buying happens downstream through OEMs, integrators, utilities, and governments. By the time that demand shows up in official data, inventories are already allocated. This is also why volatility increases. Banks still control paper pricing in the short term. They will use it. Sharp drops, sudden rallies, false breakdowns, false breakouts, all designed to shake confidence and harvest liquidity. But volatility is not weakness, it is stress, and stress reveals structure. If silver were abundant, volatility would resolve lower, supply would appear, prices would stabilize. That is not what we are seeing. Every dip meets resistance, every sell-off fails to produce physical relief. That is the tell. This market is no longer balanced, it is being managed, and management only lasts until it doesn't. At this stage, the most dangerous thing you can do is underestimate how quickly perception can flip. Markets do not move on gradual understanding. They move on sudden recognition. One day, silver is quiet. The next, it is critical. That shift does not require new supply data. It requires realization. All it takes is one catalyst, one earnings call where a hyperscaler admits power constraints, one government briefing that leaks, one procurement delay that gets mentioned offhand in a technical report. And suddenly, analysts start asking the wrong question. Not how much silver is produced, but how much is already spoken for. This is where NVIDIA's role becomes impossible to ignore. Their chips define AI performance benchmarks. Their deployment schedules define build-out timelines. When those timelines collide with physical material limits, the bottleneck becomes visible. And once a bottleneck is visible, it is too late to avoid. This is when paper confidence breaks. Traders realize that futures contracts represent claims on metal that may never be delivered. ETF holders realize redemption clauses matter. Institutions realize that access beats exposure. At that moment, silver stops trading like a commodity and starts trading like insurance. That transition is not smooth. Prices gap. Liquidity evaporates. Headlines chase moves instead of leading them, and narratives reverse overnight. The people who positioned early look calm. Everyone else feels blindsided. This is not fear-driven buying. It is necessity-driven buying. And necessity ignores price. Once AI infrastructure reaches a certain scale, silver demand becomes non-negotiable. The market can argue about valuations, but it cannot argue with physics. And physics is already in control. So where does that leave us right now? It leaves us in the quiet window before recognition becomes consensus. Silver is still being priced as a legacy industrial input, a metal used in panels, electronics, and coins. That framing is already obsolete. The reality forming underneath it is very different. Silver is becoming infrastructure, not metaphorically, literally. It is embedded in the systems that move power, manage heat, stabilize current, and keep the AI economy alive. Remove silver and performance degrades. Remove silver entirely and systems fail. NVIDIA didn't announce a silver run. They didn't need to. They announced scale, and scale is the enemy of fragile supply chains. This is the mistake markets repeat over and over. They wait for confirmation instead of understanding implication. By the time silver shortages are openly discussed, the metal will already be allocated. By the time analysts revise forecasts, the easy access will be gone. By the time headlines turn urgent, price will have done the rationing. This is not a trade that depends on sentiment. It depends on inevitability. AI expansion is not slowing. Power density is not decreasing. Performance demands are not relaxing. And silver's role in these systems is not optional. That combination only resolves one way. Not because anyone wants it to, not because speculators push it, but because physics doesn't compromise. And when markets finally align price with physical reality, the move will feel sudden, even though it was years in the making. The people who understood the structure early won't feel surprised. they'll feel prepared.